Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar remains weak into the fourth consecutive day as it now wavers since reaching a low of 68.40, has risk-off sentiment driven by escalating Middle East tension, which weighs on the currency. Reports of potential US military escalation have dampened demand for risk assets, while the US dollar holds beneath just at 100 after recently looking above there around 110 as markets scale back rate cut expectations. Domestically, Australia announced a temporary cut to the fuel exercise to ease rising energy costs, though it has done little to offset broader downside pressure on the Australian dollar. Looking ahead to this week, though, another action-packed week with the US non-farm payrolls report, the ISM manufacturing and services PMI, and retail sales. Along with that, we've got the Eurozone CPI, the RBA minutes, the Bank of Canada minutes, and the Bank of Japan Tankan survey. And also, don't forget the Chinese MBS manufacturing PMI. With all that put together, it's likely to cause a little bit more disruption in the market, along with the Middle East risk. So therefore, looking to the downside, we could see the Australian dollar maybe even reaching around 67 cents or down to around 66 and a half. Reason behind that is on the weeklies, the market is still very much heavy and therefore could see that downside move. Keep an eye on the weeklies, that is the broader technicals, and more importantly, keep an eye on the supports seen in from the report. Looking at the euro, the market still looks a little bit somewhat heavy as it looks towards the key levels. Two supports at 114.5 and 113.5, both playing a major role. And if we do see breaks from there, could see further downside slide for the euro to 111. But I would like to see 113.5 broken first before that call. Other than that, we could see a modest rebound, but still again, keep an eye on the technicals. When it turns to dollar yen, well, the market did look above briefly at 160 and didn't stay there very long, and now sharply coming back into play to a bearish case, possibly. Keep an eye on the RSI for a break, but I feel the bull trap is still lingering up at these highs, and we still can expect history to repeat itself, and that is see sharp downturns. Sterling also a little bit weaker into today, but finding slight recovery, but overall technicals are weak and therefore could see the gains given back somewhere towards the region of 132.30 or even down to 131.70. The bears are still very much in play here, especially when you look at the weeklies, so keep an eye on that. Wrapping up with commodities, well, the gold outlook did manage to touch 4,500 area, but now backing off. No support to this bull move unless we get a break above 4,515, 17 area, and also confirming the technicals, the risk may be back towards the bottom side around the lows of 4,400. Oil escalating higher, touches above 100 and then pulls back again. I still, at this point, would like to keep out due to much volatility, even though we did get the break of 90 and it didn't see the follow on. Given the fact where we are now, still keeping an eye in case the divergence comes back into play and therefore sees another downturn, which could put the market back on track to the low 90s and reassess from there. Well, that's a wrap. Thank you for joining me. And as always, look out for the Intraday report and I hope you enjoy the great start to the new week.